we're actually not at a high. Now, I think we'll get there. And then the big question on everybody's mind, and yesterday was interesting. If you look at the previous two cycles, the 17 cycle and the 21 cycle and now the 25 cycle, if you look at 17 and the 21, the time from cycle peak to low is 364 days in both of them, precisely. And then the time from cycle low to cycle high is 1,064 days. And so 1,064 days from the previous low was yesterday. Like, no, we're going to the moon by the end of the year.
Bitcoin may have dipped sharply overnight, but beneath the volatility lies a powerful macro trend that veteran investors say is only just beginning. In a sharp market move, Bitcoin slipped from $115,868 to $110,012 within just 14 hours, yet veteran investor Mark Yusko remains unfazed. He underscores the inevitability of Bitcoin's price rising in fiat terms as global currencies continue to be devalued. When governments print more money, purchasing power erodes, and Bitcoin, unlike fiat, is immune to such inflationary pressures. Yusko points to countries like Turkey and Venezuela, where collapsing currencies have already pushed Bitcoin to repeated all-time highs, illustrating what he calls home market myopia, the tendency to underestimate global dynamics through a domestic lens. He further highlights how NVIDIA Corporation now exceeds entire national markets in the MSCI World Index, underscoring how economic power is rapidly shifting. In the crypto ecosystem, dominance is also global. Binance far outpaces Coinbase, and Tether has grown so influential that it reportedly earns more in 4 days than Circle does annually. Yusko notes Tether's $500 billion valuation push could make it the second largest bank in the world, behind JP Morgan Chase and Company. Despite recent price records, he argues Bitcoin hasn't hit a true inflation-adjusted peak yet. With its finite supply and transparent protocol, Bitcoin stands in stark contrast to fiat systems, reinforcing its role as a hedge against monetary debasement and wealth erosion. Don't miss the next big crypto breakout. Hit subscribe and turn on notifications to stay ahead of every market move.
I mean, look, there's an inevitability about Bitcoin's price in dollars or yen or euros or whatever you want to price it in, rising as countries devalue their fiat currency. And the more they devalue, the higher the price. You know, it's funny. Most of us talk about Bitcoin in dollars. That's our kind of reference point. But like if you looked at Bitcoin in lira, it's been making all-time highs for years because the lira has literally devalued 99.9%. Same thing in Venezuela. So there is this, I call it home market myopia, where one, you think all the smart people are in your home market, which is clearly not true. Two, you think you dominate every market. Like, all the stocks are traded in the United States. Well, that's not actually true. I mean, some of our stocks now are crazy valuations, so they dwarf, NVIDIA dwarfs the entire Japanese market in the MSCI World Index. I mean, and Spain and France. And so that can definitely happen. But in digital assets, I think it's interesting. You got our president saying, oh, we want to be the crypto capital of the world. And then the Bitcoiners are like, no, we want to be the Bitcoin capital of the world. Okay, fine. But neither one's going to happen, right? We're 20% of global activity. Binance is orders of magnitude bigger than Coinbase. As great as Coinbase is, and as great as Kraken and Gemini and these other exchanges are, Binance runs circles around them on a global basis. So, Tether is this gigantic beast of a company. We're all excited about Circle, right? Circle goes public. Great. Goes up to $40 billion market cap. Fantastic. Excited for Jeremy and the crew. But I heard a stat that Tether makes more every 4 days than Circle will make in a year. So what's that worth? Now they're trying to raise money, I heard, at a $500 billion valuation, which would make it the second largest bank by market cap in the world behind JP Morgan. It's pretty impressive for a company with like 50 employees. So that's a rambling kind of strange answer to your question about how to feel about the all-time high, but it is a high, right? I mean, 126 yesterday is higher than we've ever been. But when you inflation adjust and you look at it relative to how much devaluation has occurred and how much M2 has been created and actually what gold prices have done, we're actually not at a high. Now, I think we'll get there. And then the big question on everybody's mind, and yesterday was interesting, October 6th, we're recording on the 7th. October 6th is interesting in that if you look at the previous two cycles, the 17 cycle and the 21 cycle and now the 25 cycle, if you look at 17 and the 21, the time from cycle peak to low is 364 days in both of them, precisely. And then the time from cycle low to cycle high is 1,064 days. And so 1,064 days from the previous low was yesterday. And what's crazy is there's a guy, and I wish I could remember his name so I could give him credit, but I saw there's this guy that tweeted in 2023, 2 years ago, that the simulation will be repeated and the new high will occur on October 6th, and then we head back down.
That's pretty wild.
Wow. Now, there are a whole bunch of people who are like, no, we're going to the moon by the end of the year. I mean, maybe.
Gold took 5,000 years to prove its worth. Bitcoin is rewriting the rules of money in just 15. Gold took millennia to prove its value as money. Bitcoin is doing it in just over a decade. Mark Yusko argues that earning and saving in Bitcoin represents a powerful shift in financial freedom, breaking individuals away from the inflationary trap of fiat currencies. Unlike dollars or euros, which lose purchasing power over time, Bitcoin allows holders to preserve and grow their wealth. One Bitcoin remains one Bitcoin. It's the fiat that weakens, not the asset. Yusko believes this shift liberates people from the endless cycle of working to maintain value, unlocking space for innovation, creation, and entrepreneurship rather than survival. He frames Bitcoin as the next evolution of money, surpassing the limitations of gold. While gold has been a trusted store of value for 5,000 years, it is heavy, hard to divide, and difficult to move across borders. Bitcoin, by contrast, is lightweight, divisible to a Satoshi, and instantly transferable globally. Gold stores value in atoms. Bitcoin stores it in energy, mined through mathematics. Unlike fiat that can be printed at will, Bitcoin's fixed supply and proof-of-work security ensure real economic integrity. For Yusko, this makes Bitcoin more than digital gold. It's the future of sound money. Let's get back to interview.
Well, if you work and get paid in Bitcoin, you're no longer a slave because your money actually appreciates. Now, here's the thing. Bitcoin didn't change. One Bitcoin, one Bitcoin. The Bitcoin we talked about 7 years ago and the Bitcoin today, it's the same thing. It's one Bitcoin. The amount of dollars you need from 16,000 to 126,000, that's different, but it's still the same Bitcoin. So what changed was the money got worse, not Bitcoin getting better. Now, Bitcoin did get better. It's got better hash rate. It's got more decentralization. It actually is better. The network is better. And that's why the value of it increases. But at the end of the day, it's the fiat that went down in value. And what's interesting about saving in Bitcoin versus saving in fiat, if you save in Bitcoin, and again, I'll give Jimmy full credit for this, he says you actually unleash the most powerful force in all of human history, which is human creativity. Because if you don't have to constantly be working and striving to preserve the purchasing power of your money, and your money actually grows, you have some time to think, to create, to maybe start a new business, right? Maybe build a new product. You don't have to just do this slave labor and get paid in this depreciating asset. So again, long answer to an interesting question, but it to me, it all kind of weaves together in that why Bitcoin is such an important innovation, why the construct of money is changing. In it, look, money is a very unique thing. It's an asset that exists in the absence of a liability, right? That's what money is. And that basically the only thing that meets that criteria that is used is gold. Silver meets that criteria, copper, puka shells. There are a lot of things that would meet that. But the only one that's been used for 5,000 years, roughly, because of belief and custom, is gold. But gold, we've talked about this before, gold suffers from two problems. It's not very portable, meaning it's really heavy and you can't stuff it in your pocket, a gold bar, and walk through.
Right.
Actually, you can walk through the the metal detector because it's inert. But anyway, so gold isn't very portable and it's not very divisible. Like if I had a bar and I wanted to break it in half, I'm not strong enough. And even if I could break it in half, I couldn't stuff it in the computer and send it to you. All the Bitcoin in the world fits right here. Now, I don't have any on my phone. Don't SIM swap me. It's not worth it. I keep mine in cold storage. In fact, I'm wearing my Chili Willy socks today for Bitcoin cold storage. The point is that it's also very divisible. I can send you 1/100 millionth of a Bitcoin, right? That's a one Satoshi. I can send you one Satoshi for free, and that's better than the current system. So it is this technological improvement that takes old money, right, 5,000-year money, into new age money for the next 5,000 years. But everyone says, but that's not money. Money is dollars and yen and euros. Like, no, those aren't money. Those are currency. And, JP Morgan said it, right? Gold is money. Everything else is just credit because they're backed by debt. And Saylor, came and said, well, no, Bitcoin is money. Everything else. Okay, great. But it's true, right? Everything else is credit. Everything else is debt. Everything else lives in a world where governments can print it. Now, in the old days, you literally had to printing press it and cut the paper and fold them up and hand them out. Now you just push a button and you create more ones and zeros. Well, that's just too easy. There's no proof of work, right? Which is, one of the great innovations of Bitcoin. But anyway, I digress.
Bitcoin's evolution reflects a broader shift in global finance, away from inflationary, centralized systems towards scarce, decentralized assets with real economic integrity. Its portability, divisibility, and security give it an edge over traditional stores of value, making it increasingly attractive as governments expand money supply and weaken fiat. With Tether and Circle now controlling over 80% of the stablecoin market, the digital asset ecosystem is consolidating around a few key players, underscoring Bitcoin's role as the anchor of this new monetary era. As inflation, liquidity cycles, and geopolitical pressures reshape the global economy, Bitcoin is emerging as a foundational hedge. More than a speculative asset, it's a new standard for preserving and transferring wealth. Could Bitcoin's growing dominance amid inflation and stablecoin consolidation signal the beginning of a new global monetary standard? Crypto moves fast. Drop your thoughts in the comments, share with your network, and subscribe to ride the next wave before it hits.